So, ever wondered how an RBA rate change hits your mortgage so fast? Let's break it down.
You've probably felt this, right? That little email ping that just sinks your stomach. But why so quick? Well, it's not magic. It's actually a really fast, precise process.
Okay, Section 1. It all starts with the RBA's most powerful tool, their master key.
And that key is the cash rate. It's basically the bedrock cost of money in Australia.
And if you're in that 60% on a variable rate, this number is a pretty big deal.
All right, Section 2. Now let's trace the journey from the RBA's decision right to your wallet.
It's a three-step process, and it's the reason everything happens so darn fast.
First, the RBA creates these guardrails around the cash rate to keep banks in line. Then, the bank's own costs change instantly. They have to pass it on to protect their margins. And this all happens incredibly fast. We're talking days before it hits your next repayment. So what about fixed rates? Yeah, they're a whole different ballgame. Let's look at Section 3. Okay, here's the key difference. Variable is about now. Fixed is a bet on the future. And that's exactly why they can move in totally different directions. They're just different animals. So, knowing all this is great, but what can you do about it? Let's talk control. So, a tiny 0.25% rise on a $500,000 loan, that's about $65 a month. See, when you get how it works, you can stop reacting and start planning. So, here's your toolkit. A few smart moves to help you manage your mortgage like a pro. So, the big question is, are you ready for the next move? Now you know how it works.